let's talk about the stock of BAT, or British American Tobacco. This company is an interesting one because it is one of the oldest companies in the country, and also it is one of the oldest which was listed at the NSE, and therefore it has a myriad of investors who have been investing in it for a short period of time and also a very long period of time. That is why this video is essential, because it's gonna be able to bring insights to any type of investor and people who have been holding this stock for whichever period of time. As we are speaking right now, the stock of BAT is going at 560 Kenya shillings per share, and the stock is up. I'm saying so because when you look at year to date, it is up 22%. When you look at performance over the past 1 year, it is up by 30.54%. And of course, over the last 5 days, we are talking about a 1.82% share appreciation. But over the last month, it's gone down by 4.1%. And investors, of course, are getting paid handsomely to hold it. I'm saying so because this is one of the most enticing dividend stocks in Kenya. Simply put, the dividend for financial 2025 on this particular stock was 70 shillings per share, making it one of the stocks in the country with the highest dividend yield, because its dividend yield was upwards of 12%. And also, it's continuing to do amazing numbers because just the first half of 2026, the company has made a record 3.08 billion profit. But then again, there are a few concerns, which also at the end of this video really appreciate why they are very formidable concerns. Case in point, costs are growing faster than revenue. Okay? Operating cash flow is down by almost 20%. And also illicit cigarettes remain a major challenge within the Kenyan market. And beyond that, there is a recent legal suit. Okay? I think it was filed about sometime last week. It is about BAT facing a 4.5 billion legal claim related to its Velo marketing campaign. So, after the 30% 1 year gain and the huge dividend, would I buy BAT Kenya at 560 shillings per share or not? At the end of this video, you're going to understand my verdict. I'd really ask you to watch the entire video for you to understand the different numbers and the different aspects relating to the stock of BAT. In case you are new here, my name is Afagza Sifuna. I am a finance expert and qualified accountant, bringing you amazing videos about investing and making money each and every day. In case those are kind of topics which you like, down there is a button called subscribe. Please consider subscribing. Don't just watch the video and continue your life. Consider subscribing for you to help this channel to grow. And while you still at it, drop a like on this video. And by the way, in case you want one-on-one coaching, because some of you have reached out, I've also put my WhatsApp number down below. Reach out to me on WhatsApp. We're going to have a brief introductory call, and then we'll align on how best I can help you in your investment journey. The rates are very affordable, so don't hesitate reaching out. Reach out. My WhatsApp number is down below. And of course, as always, I've also attached additional resources which are going to assist you when it comes to investing down in the comment section. I've pinned a comment there with additional resources which can assist you deeply understand how to do stock valuation in a very simple way, and also to understand how to build and manage your stock portfolio. Having said that, I'd like to highlight something. In this entire video, I'm going to use different set of data. For example, I'm going to use reference share price of 560 Kenya shillings. I'm going to use the full year financial report of the year 2025. I'm going to use the first half financial report of year 2026. And of course, also using the comparable period financial reports, first half of 2025, so that you are able to understand BAT comprehensively. As a starting point, let's look at the company snapshot. As I stated, BAT is one of the oldest companies at the NSE. And I'm saying so because the company started in 1907 in Kenya. Okay? And then in 1969 is when it was listed at the Nairobi Securities Exchange. And then in 1998, it changed its name to British American Tobacco Kenya. Today, BAT manufactures, sells, and exports cigarettes and other nicotine products. Its business includes domestic sales, exports, traditional cigarettes, modern oral nicotine products, and so forth. And that's important because the traditional cigarette market is facing increasing pressure. So BAT is essentially balancing, okay? Traditional cigarettes, exports, and newer nicotine products. In case you buy the stock of BAT, what exactly are you getting onto? Let's look at BAT's investment thesis. And the very first thing you're going to be getting onto is strong dividends. I'm saying so because, as I've mentioned, the dividends for the financial 2025 was 70 shillings per share, making BAT one of the companies with the highest dividend yields in the country. Then secondly, you'll be getting on to strong profitability because financial 2025 profit after tax was 5.25 billion Kenya shillings. Just the first half of 2026, profit after tax has crossed 3 billion Kenya shillings half of the year for the first time. It stood at 3.08 billion Kenya shillings. And then the third thing you'll be getting onto is revenue that is still growing. And I'm saying so because first half of 2026, net revenue was 12.27 billion Kenya shillings, and that is up by 4.6% year on year. And then the fourth thing you'll be getting onto is share price momentum. Despite the recent 1 month decline, BAT has still managed 22% year to date. Simply put, in just the year 2026, BAT shares have appreciated by 22%. And of course, they did appreciate by 30.5% over 1 year period. And then the fifth thing you're going to be getting onto is growth opportunities. Remember, the export market and modern oral nicotine products are helping offset pressure on domestic cigarette volumes. So the investment thesis for you is strong profitability, high dividends, reasonable valuation, and of course, export and new growth opportunities. Having spoken about that, let's look at the numbers. Simply put, financial performance. Starting one is revenue, okay? And the revenue for the first half of 2026 did increase. And I'm saying so because BAT's net revenue increased from 11.73 billion Kenya shillings to 12.27 billion Kenya shillings. That is a 4.2% year-on-year growth. And the main drivers for these were recovery in the export sales and also growth in modern oral nicotine pouches. But domestic volumes remain under pressure. Therefore, on revenue, this particular company is on the positive side, okay? And then when we look at profit, the first half of 2026 profit did increase. And I'm saying so because it increased from 2.99 billion Kenya shillings to 3.08 billion Kenya shillings. That is a 3.1% jump. And also EPS did increase from 29.83 to 30.37 shillings. So BAT delivered strong half-year earnings. Therefore, on profit too, the company is on the positive side. And then, when we look at the 2025 numbers, right? The numbers did also amazingly well because revenue was 23.19 billion, profit after tax was 5.25 billion, EPS was 52.46 for the entire year. So actually that tells you, even looking at the 2025 numbers, the business remains highly profitable. But then again, there is a warning sign which I want us to talk about, right? And that takes us to costs. When you look at operating costs, in the first half of 2026, operating costs increased by 6.8% to 8.02 billion Kenya shillings. Revenue grew by only 4.6%, and yet operating costs increased by 6.8%. As a result, operating profit increased by only 0.8%. And operating margin did decrease because it decreased from 36.0% to 34.7%. Therefore, costs is something to watch, right? Because BAT is growing, but costs are eating into its growth. And then when you look at cash flows, the first half of 2026, okay, cash flows from operations did fall they declined by 5.9% to 3.42 billion Kenya shillings. Net operating cash flows did fall by almost 20% to 2.13 billion Kenya shillings. Dividend payment was the major factor when it comes to cash reduction. So this isn't necessarily a liquidity crisis, but it gives an important lesson here, okay? Don't just analyze BAT stocks using profit alone. Watch the cash too, because if cash flow is declining and operating costs are increasing, then it's gonna mean that over time, in case the trend is continuing, it's gonna really eat into the company's overall performance. Let's now look at dividends in details. When you look at the dividends of BAT, dividends is BAT's biggest attraction. And I'm saying so because in the financial 2025, BAT did pay an interim dividend of 10 shillings, okay? And then it paid a final dividend of 60 shillings. Therefore, its total dividends were 70 shillings per share. And that was an increase of 40% from the financial 2024, given total dividends for 2024 were 50 shillings per share. In the first one half of 2026, BAT maintained its interim dividend at 10 shillings per share. But there is an important distinction, okay? The 70 shillings per share paid in the financial 2025 isn't really confirmed yet for the year 2026. That's why I just said they paid a interim dividend. Final dividend is going to be paid after the second half of the year results, okay? Therefore, looking at the financial 2025 EPS, the EPS was 52 shillings and 46 cents compared with the 70 shillings dividend. That's a payout ratio of approximately 133%. Okay, that there also deserves attention because in payout ratios, there's something called sustainability. At this percentage, it won't be sustained. Of course, it doesn't automatically make the dividends of BAT unsustainable, but then again, investors should understand that the financial 2025 payout was higher than reported earnings per share. Okay, so when it comes to dividends, we can give BAT a clean bill of health. Of course, as stated, we need to look at sustainability, but then again, it is doing very well in the Kenyan market. And then, when you look at valuation, how is the stock of BAT valued in the market? And look at 5 measures, right? Starting with EPS. Of course, I've said EPS is doing amazing because 2025 EPS was 52 shillings and 46 cents. The first half of 2026 EPS is 30 shillings and 75 cents. Therefore, analyzed one looks good, okay? And then looking at the PE ratio or price to earnings ratio, right? And just to make it simple, assuming the price of 560 shillings per share, the PE ratio is 10.7 times. That tells you, depending on whichever share price you peg it on, the PE ratio is upwards of 10, which is amazing for the financial 2025, right? But then again, the current rate is approximately 9.1 times. That isn't an extreme valuation. It is within a healthy range, okay? And then, looking at dividend yield of BAT was upwards of 12.5%, making it one of the most attractive dividend stock in the country, okay? And then, looking at the price to book ratio or PB, the price to book ratio is 3.6 times. This tells us investors are paying a significant premium to the company's book value. And of course, this makes sense given the demand of BAT stock has been on the rise, more so after it having been consistent when it comes to paying dividends, okay? Then, when you look at earnings yield, right, using the analyzed first half of 2026 EPS of approximately 61 shillings and 50 cents, earnings yield is approximately 11%. This tells us that the approximate earnings return we're getting relative to today's share price are pretty decent, okay? Therefore, when you look at valuation of this particular stock is quite decent, right? And that's, of course, tells us that this stock isn't obviously cheap, but certainly not extremely valued too, because some of the items in the valuation seem to be undervalued, and then others, like for example, the PB ratio, seem to be quite at extreme premium. Let's now look at risks, because risks when it comes to BAT are a key thing which is bound to determine how the company and the stocks are going to perform in future. And the very first risk, which is the biggest risk even the company has highlighted, is illicit cigarette trade. BAT estimates illicit cigarette to represent approximately 45% of Kenya's cigarette market, and therefore this is eating into their sales within the domestic market. Then the second risk is consumer down trading. Okay, and this so because pressure is on households' income and therefore is pushing consumers downwards when it comes to the consumers being able to purchase the products of BAT. And then the third key risk is cost pressure. As I indicated in the first half of 2026, operating costs grew faster than revenue. Therefore, this particular business is facing some operating cost pressure. And then the fourth risk is regulation. Remember, tobacco and nicotine products remain highly regulated. Therefore, changes in excess taxes, marketing restrictions can materially affect this business because its core business is cigarettes business and nicotine products. And then the fifth risk is legal. And I'm saying so because BAT Kenya, as mentioned in the intro, is facing a 4.5 billion legal claim relating to its alleged unlawful promotion of Velo nicotine pouches. The claim includes 1.5 billion for public health fund and 3 billion in punitive damages. We're gonna see how this is gonna pan out. Please remember, it is a claim. It isn't a judgment against BAT. So it's gonna take some time for that decision to be made, but we're bound to see how this pans out. So when you look at risk, they are averagely risks worth noting, and realistically, they could affect performance of BAT going to the future. And of course, going to the future, some of the catalysts, right, or future growth potential of BAT are, for example, the export growth, which is looking very amazing. Secondly, the modern oral nicotine products. Products such as, for example, Velo provide another potential revenue avenue for BAT. Third one is reduced illicit trade, because better enforcements could help BAT recover legitimate domestic market in case the illicit trade does reduce greatly. And then, of course, four, they have room to do better cost efficiency, right? If cost growth slows down compared to revenue, then the business is going to be in much better position because it's going to have much better returns. Having spoken about all these, would I buy the stock of BAT today, or what would be my approach? My verdict is that I would selectively buy or hold, okay? And I'm saying so because if you are a dividend investor, BAT deserves serious consideration. If you are looking for rapid growth, then this is probably not your best opportunity at the NSE. And if you are buying purely because of the 70 shillings dividends, I'd be cautious, because dividend is not paid the same way each and every year. Just because last year they paid 70 shillings per share dividend, which of course, as you've seen, it was upwards of 100% payout, it doesn't mean that they're going to pay the same amount of dividend this year. But as an individual, what I'd like to see, for example, is earnings of BAT continuing to grow, okay? Cash generation recovering, margins stabilizing, and dividends remaining well supported. Therefore, my final verdict looking at dividend, profitability, and cash generation on investment is that I'd selectively buy or hold. In case you already have the stocks of BAT, maybe you might consider holding. In case you want to get to the BAT stock, you do something called selective buying. Don't just jump in it fully and allocate a huge chunk of your portfolio on the BAT stock, but it is worth a stock paying attention to. Guys, what do you think about this video? And most importantly, what do you think of BAT as a business and its stock at the NSE? Comment down below. Let's continue discussing in the comment section. Cheers, guys, and you all stay safe.